All right, this might be the second upload of the day. I don't know yet, but I'm going to be going over my strategy, the way I trade. You can see it here. Basically, first and foremost, I basically use internal to external. So pretty simple, pretty sweet if you watch the summer videos. So if you go back to these videos right here, how we're improving as a ICT trader, I was basically switching my strategy. Okay, let me go through this first. So from these points right here, whenever I lost my funding account, I wasn't really using higher time frame narrative to my advantage. Of course, I would use it here and there to have a bias, but whenever it came to executing trades and just using the higher time frame narrative, I would get so sucked into the lower time frame that I wasn't able to just follow my higher time frame bias. Sometimes I'll go against it, I'll trade against it, or sometimes I'll trade in areas where just there's only lower time frame entry confluences, but there's no higher time frame confluences, and I lose. And then in there, I was like, all right, hold on, I need to change something. So then during the summertime, whenever I made this video right here, how we're improving as ICT trader, I read a comment from one of these, from this video, I believe, or this one, and someone told me to use external to internal only, and I decided, I was like, wait, let me just do that, let me make that a challenge video. That should not be a challenge video. I should actually use it. I'm actually seeing success because I was implementing it, demo trading, and I was like, all right, okay, I like this, let me use it. So then I started to use it, and that's basically how it all started then and there. And so we created a model based off of that, but then I realized I need to use, certain time frames to my advantage. And that's basically what happened here. Here you can see we have the 4 hour, the 1 hour, and the 15 and the 1 minute. And what I look for in these certain models, which I'll go over right now. Oh yeah, and another thing, before I even created this with the the time frames and like using internal to external, I did not backtest any of this. So, and then at times when I would trade my phase 1, phase 2, I was simply just rushing the trades and I wasn't actually following a simple step plan model. I would sometimes go and deviate away from it. I would go back to my old habits where I would just trade my lower time frame entry models. To really solidify this model right here into my head, I just went and backtested it, all these right here, all these certain different time frames, all these different confluences, and I would use those to my advantage. And that's basically what happened here after we lost. So for this trade, it was a winner on USD JPY. So here we're looking for the internal buy side imbalance to be met, and you can see that it was met. And then on the 1 hour, we would look for a 1 hour inversion fair value gap, and that happened there. So what I like using is inversion fair value gaps, especially when I have a higher time from confluence. Like it can be an order block, it can be a breaker block. What I look for is the market to come back down to manipulate. And I'm gonna show you guys that right now. Instead of just talking about it, I'm gonna just show you guys real quick. So this is what I'm talking about. So we retrace, we tap up into it, and then I look for something on the lower time frame to give me, this is like the higher time frame, this is what I look for on the lower time frame whenever we're inside of that PDRA, is for an inversion fair value gap to then retrace into, to then move higher, to give me that confirmation to then eventually move and target something higher. Like that gives me the confirmation. And again, I do the same thing on another lower time frame whenever we're retracing on the 1 hour fair value gap. All I look for is another inversion to then target higher prices, and that gives me the confirmation. It doesn't simply have to be inversion fair value gaps. Sometimes you'll have the 22 model where you have high, you retrace, you break above it, and then you have strong confirmation to then move higher. That's sometimes what happens here. I know some people only like using the inversion fair value gap model. This is the thing. All I look for is this, my higher time frame bias or my higher time frame PDA rate to be hit, and then a confirmation time frame, which is like the 1 hour, to make an inversion fair value gap to give me the confirmation to show me. Or it doesn't have to be that either. It can be one of these, the 22 model. It could be a unicorn model on this time frame. Then I just look for a lower time frame inversion, tap it into the higher time frame PDRA, and that's all I do. I continue to scale down and look for certain things like this to give me the confluence to then take the trade. That's all I look for. And you can see that here. We had a 1 hour inversion fair value gap on the 15-minute time frame. We had a 15-minute buy side imbalance we were retracing back up into, and then you can see we created a bullish order block. We opened up the next candle, we went down lower, and that's where I entered off of that bullish order block confirmation, which was a basically a buy side imbalance here, a regular fair value gap. There was no 22 model. Maybe you can classify this as a 22 model entry, but either way, we had a bullish fair value gap. We entered, and you can see the market just moved up higher. Of course, this was during Asia session. I won't trade Asia session, but I was just simply following the model. So basically, that explains a lot. But of course, I use other confluences such as premium and discount, CRT, and of course, external. I target the external using the internal to external. That's the main confluence of the models, internal to external. If I don't have internal PDRAs being hit, I usually don't use external to internal. I feel like that's just not, it just isn't high probability for me, and I just don't have enough data using it whenever it came to backtesting it. Here's another trade idea. We can go over it. So on the weekly, we had a weekly buy side imbalance we were delivering back up into. On the 4 hour, we had a 4 hour PDRA, which was a buy side imbalance form. And then on the 15, we had a 15-minute buy side imbalance being tapped up into, and then on the 1 minute we had a 1 minute buy side imbalance. So you can see that there. It's pretty simple. All we use is basically the internal arrays. We combine them on each time frame and wait for certain confluences to form. We don't simply just have the weekly confluence and we drop down to like the 15 and then the 1 minute. We have to wait for each time frame to give us, a certain confluence, to then scale down even further and further to then enter. And that's the main reason what I was looking for whenever I was trading these. And sometimes I would deviate away from that, and I realized I shouldn't do that. The main thing that happened to me whenever I was using this model right here, this is my version 1. Whenever I was using it, I realized I lost, and I didn't know why I lost and how could I prevent this loss. And I'm gonna go over which trade made me change it, and I implemented CRT. So this was one of the trades I had on my 5K account that I lost around 2.5% or maybe 3%, near 3%, and I just got super destroyed. And I realized maybe this model we're using is not one that I should be using. Maybe it doesn't work. Maybe I was questioning so many other things, and I realized I need to actually implement something else to give me more of a high probability or a higher win rate. Because I realized when I was backtesting also, my win rate wasn't the best. Sometimes I'll win, sometimes I'll lose, but the risk reward will always be there if I simply held the trade. But in live trading, am I actually going to hold those trades that long? I want speed on my trade, I want delivery. I'm not the type of trader to be holding these type of trades for over 30 minutes. We had a break of market structure, 4-hour PDRA, and I realized, when we measured the dealing range on the 1 hour, we're not nowhere near the premium. But on the 1 hour time frame, we had a 1 hour sell sign imbalance. We tapped up into it on this candle, so we manipulated a lot more. And then on the 15-minute time frame, we had a 15-minute inversion fair value gap. So even then, we wouldn't even need the 1 hour. We had a 4-hour PDRA, but a 15-minute PDRA, and then on the 1 minute, we had a 1 minute SIBI, which we entered off of since I wasn't able to catch this wick. But I got a little bit late, and then you can see we were just targeting this low to move to break even, and you can see we just came back down lower, disrespected it, and then we went up higher. And I know a lot of y'all would be like, oh, you're trading way too deep into the discount, taking shorts. You should have been waiting for the 50% or the premium side to be hit. Of course that is ideal, but again, if we're bearish, we're not really going to likely retrace that deep into the fair value gap if we are bearish from a higher time frame perspective. You have to understand that if we're super bearish, usually majority of the time, whenever you're first moving, like fair value gaps like this will be left unfilled. If you're starting to have bearish movement here, we can retrace up into it, but I don't want to see much movement other than that. Just that made me question, like how can I get better at this trading style? What can I do to implement in my model to make it a lot more high probability and to give me more conviction for my trades? Because now I was questioning whether each trade was good or not, because trades like this made me question, is my strategy profitable? Am I gonna win? How can I prevent losses like this from happening again? And that made me come across CRT. So this is where in my trading I just started to lose myself. So it was either going to be CRT or DTFX. I was simply going to step away from ICT. I was going through it a lot after that 3% loss. I didn't know what type of trading style I wanted to do. I was questioning my trading. I was questioning whether I wanted to even trade ICT any further. I was thinking about switching from DTFX. I remember I downloaded X or Twitter, and I was just seeing a lot of people find success using DTFX, scalping, and that's what I wanted, some high frequency scalping, getting in and out, winning my trades. And one of the things I stumbled upon was Omar, his training trade I should say, and he was using this one candle strategy, and he calls it the engulfing bar strategy, but I thought that was CRT. So then I realized, okay, what is this? I started to do more research, the engulfing bar strategy, and I was using it incorrectly. So I'm gonna show you some examples. So if we go to my Discord, my crypto analysis here, you see here I was just marking out Fibonacci, these candles sweeping and moving higher, and I was just using candle range theory, or his one engulfing bar strategy, and you can see it was 811. You can see when we took this loss, I don't know what I was doing actually. I was just putting down the Fibonacci on each candle and just hoping for the best, honestly, and I just didn't have enough research or data on what I was even doing. You can see 813, and around here on 817 you can see that there we were still using that, and here you can see I was just changing my strategy around 819, 820. I was changing everything up. And then eventually I started to realize I was using it incorrectly. So then I did my research on CRT, watching videos like Romeo, candle range theory, what even is candle range theory, how to even trade it, how can I implement it into my model. And I started just using that as a little tool to help me. And then after that, you can see we were backtesting. We had some really good results. This is 10 trades. And again, the trade frequency isn't very high with CRT if we're using CRT with the time frame alignment model. Either way, like the V1 or the time frame alignment model, whenever it simply just comes down to using these time frames, looking for inversion for value gaps, with CRT makes it even less high trade frequency. And that's kind of why this whole account has not been, I only find really one good trade a week. And that's kind of why, we just don't really trade much on this account. I'm gonna show you guys one trade with CRT versus, the other one, the V1. This is the one trade with CRT. You can see here it's a lot different. The accuracy on the trade is a lot better. On the 4-hour time frame, we had a 4-hour buy side imbalance being hit, and then we had a 1-hour CRT. You can see we swept the low. Even if you use this one, we swept the third candle open up. We swept the candle low and we closed back above. So then eventually we had a 15-minute inversion for value gap and a buy side imbalance. We tapped up into it, and we had an order block there tapped up into also. And then on the 1 minute time frame, we had a lower time frame unicorn model presented here with a breaker and a buy side imbalance where we traced. You could have entered there. I entered at the inversion for value gap, which isn't bad either. And then if you use your standard deviation targets, you can see here this is where you would likely aim for, and that's how I was able to bring up my high, win rate and then low trade frequency. I don't find mini trades, even if I use only like these three time frames, I still don't find many trades. But every time I do trade, every single model feels very high probability. Every time frame alignment trade I take feels very high probability. But the core foundation, again, don't get it wrong, is internal to external. I'm just simply not looking for CRTs on every single time frame. That doesn't work like that. I have to have internal to external on majority of my time frames. Especially the higher the time frame, the more important the internal to external has to be. Don't get it wrong. Only because I'm using CRT doesn't mean I'm not using ICT. I'm using ICT with CRT. I'm combining these two confluences, and I'm making sure I have every single confluence, every single time frame in alignment with the one previously, because that gives you strong confirmation. That gives you a lot more confluence and conviction with the trades you're taking. It just provides a lot more conviction and high probability, and that makes your bias so much more correct, the narrative correct, all that. That's the most important thing. The entry is probably going to be just the hardest part if you're like having bad trade management like me, not holding the trades, or risking too much, being fearful. That's me right now, which I'm going to go more in depth about in a psychology video. I'm going to show you guys one trade that I have taken, and this was recently on the trade. So you can see we just had $40, and it was this one right here on gold, $42. I was counting the commission. And so yeah, it's like $40. This is a gold trade, October 16th, recent on this account here, fully transparent, no hiding anything. I'm gonna show you guys why I took this trade, how I used it, and I'm just gonna give you guys like a little brief update on my strategy. I'm basically showing you guys my strategy, how I'm trading. Like I'm not hiding anything. I showed you guys, I told you how I got the foundation at minimum. So this thing is once a week minimum, 3 times a week max. If I'm trading only New York session, it could be New York AM, New York lunch, New York PM. 3 max in my opinion for the whole week. And I don't usually watch PM session, if I'm being truly honest. I usually close it by the time lunch hits. Like right now is lunch, or PM session right now, I'm already done. But and I also use the strategy on crypto. When it's swing trading though, this is a different thing. When it's swing trading on crypto, I just simply erase this 1 minute, and right here this 1 minute, and this 1 minute right here, and this 1 minute right here. All I use for is the daily, the 1 hour, and then the 15 for entry. Or sometimes whenever it's more higher probability, I use the daily, the 4 hour, the 1 hour, and the 15. All right, so I have it here. You can see the monthly, daily, the 4 hour, the 1 hour, the 15 for the entry, or sometimes it's the monthly, weekly, daily, 4 hour, 1 hour for entry. That's basically what I use for crypto whenever I'm swing trading on crypto. That's all I use basically. I'm always usually having a monthly confluence, weekly or daily, or 4 hour or 1 hour. Trade example right here on Jasmy. Whenever I took this Jasmy trade here, you can see here we hit a good amount, but the swing trading came from a weekly confluence right there. Weekly CRT, we're reversing. I'm wanting to see the CRT high, and then on the daily, what provided that daily confluence was a daily inversion fair value gap. And then on the 4 hour time frame, we had a 4 hour inversion fair value gap also, and then on the 1 hour we had a 1 hour buy side imbalance, which we were retracing back up into, and I wanted to see the 4 hour inversion also hit. So then boom, that provided a lot more confluence, and you can see there the trade eventually completed the market maker model, hitting our target, but I closed it a little bit early since the standard deviation targets were telling me reversal, and then basically we met the target. Beautiful trade. We would probably win a little bit higher than this, which I'm not really worried about anyways. So I promise you I'm not hiding anything. This is all I use now. This is all I use. I'm showing you guys clear examples. This is all I've been using. So when it comes to this account now, when it comes to this funded account, that's all I plan on doing. Oh yeah, with the trade earlier, let's go over this trade. So we had a 4 hour confluence, 4 hour buy side imbalance, internal resistance right here to external. Where's our external target? This high up here. And then if you go to the 1 hour, you can see we had a 1 hour buy side imbalance being respected. What I was looking for here is also a CRT, but we just weren't able to form it. If we have a 1 hour confluence, or if we have an internal array confluence with CRT, that provides the trade idea with super high confluence. And whenever I'm trading, I try to look for one time frame to have CRT. Like the 15 minute here has CRT, 4 hour, the 1 hour don't, but then the 15 minute does. So I don't have to look for a 15 minute confluence such as a fair value gap, inversion fair value gap, a breaker or order block to form. I just simply look for the CRT to form to provide super high confluence. And then on the 3 minute, we had a 3 minute inversion fair value gap form. We waited for the 15-minute candle to open up, form CRT here on the third candle confirmation. That's all I use, candle confirmation. I don't use that advanced one either. And then here you can see we opened up, we moved lower, and I closed the trade way too early. I closed the trade on this candle, the same candle. I didn't even let it run, and that's something I'm dealing with, which I'm going to talk about in a different video. So yeah, that's pretty much really it. If you have any questions, comment down below. And again, this is all I'm using, bro. Like this is all I'm using right here, internal array. Sometimes I look for the inversion for like up to form. Sometimes I look for just the CRT here to form to then eventually have that candle closure retracement and then eventually hit the 50%. And that's all, so this is all I'm using, guys. I promise you I'm not using anything else. This is my new strategy. This is what I'm using. Lower time from entry, again, it could be a unicorn, it could be a breaker, or it could be unicorn model, 22 model, inversion for like a model. It doesn't matter. I'm just using whatever the higher time from conviction is playing off of, and I just simply scale down, get my confirmation. The entry doesn't matter. It could be multiple different entry models, and that's pretty much really it. So yeah, peace.